demystify, learn. BQ Learning. Only on Bloomberg Quint.
Well, hello and welcome. Good morning. You're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let me take you through the headlines. Asian markets trade mixed after Wall Street sinks on inflation fears and surging interest rates. It's a political cliffhanger in Karnataka with the BJP and the Congress JDS combine seeking to form the government in the state. And hit by the Nirav Modi and Mehul Choksi fraud case, Punjab National Bank reports a fourth quarter loss of over 13,400 crore rupees, the first in its history. Asset quality also takes a hit, with gross bad loans rising by over 50% sequentially. And it's going to be a busy day today in the earnings space. ITC, Tata Steel and Hindalco are the three big Nifty companies that will be reporting their numbers today. All right, with that, let's turn to the international markets, and starting with the US markets. A surge in US government bond yields to their highest level in almost 7 years sent Wall Street shares sliding on Tuesday. The US bond yield closed at 3.06%. Strong retail sales data stoked inflation concerns, and investors fretted about the looming trade talks between the US and China. Abigail Doolittle wraps up all the action on Wall Street in this report.
Stocks finished lower in Tuesday's Wall Street session. In fact, for both the Dow and the Nasdaq, it was the worst day in about 3 weeks. For the S&P 500, the worst day in nearly 2 weeks. Now, the Dow and the Nasdaq falling more than the S&P 500, down about 0.8%. The S&P 500 down about 0.7%. At the lows, all three major averages down more than 1%, all of this against the backdrop of rising rates. So lots of volatility on the day, par for the course of the year of 2018. Rising rates that causes fears for investors, or at least uncertainty about the possibility of inflation or repricing of risk, even the valuation of stocks. Now, on the topic of rising rates, the 10-year yield back above 3%, in fact, at 3.07%, its highest level since 2011. And again, that causes lots of different questions on the part of investors, and it certainly caused the real estate sector to drop, the worst for the S&P 500. The real estate sector as a whole tends to not do so well against the backdrop of rising rates. It affects this sector on a number of factors, and on the day we did have home building stocks down sharply, including D.H. Horton and Lennar, the worst day since 2015. Rising rates may not help home building and home buying activities. It also caused Macerich, the mall REIT, to fall. That stock has a very high dividend yield, which looks less attractive when rates rise. But rising rates do help banks, and in this case, the regional banks, two of them at least, did rise on the day, including KeyBank and Fifth Third Bancorp. And interestingly, not surprisingly, rates rising did help the Bloomberg Dollar Index up for a third day in a row and turned that pressure gold. And on this odd day of risk off where stocks dropped, bonds dropped, we had some of those high beta tech names, big tech names, including Apple, Facebook, and Alphabet, also take a lower. So again, an odd day of risk off, even though Haven bonds sold off, but that rising rate environment causing stocks to be under pressure. In New York, Abigail Doolittle, Bloomberg News.
All right, let's take a look at the Asian markets now, and seemingly most of the important ones that have opened in the red. On your screen right now is the Nikkei. It's down about 0.3%. The Chinese markets have just opened up, in Hong Kong as well. The Hang Seng, in fact, down about 0.5%. China is also just about opened up in the red. The only outlier that I can see is the Australian benchmark, which is trading in the green. With that, let's turn to India, and Jayesh Khilani and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. I think the fallout of the Karnataka elections and the decision really that the governor has to make will be at the front and center today.
That's right, Alex. Along with that, what will be in focus is the US 10-year yield, which has actually surged yesterday to 3.09% and touched the highest since 2011. Now, if you look at the cues that we got from overnight, similar cues can be seen from the SGX Nifty as well, which is indicating a 50-point or a little bit more than that on the downside. So we'll likely start below the 10,800 mark. And yesterday itself, we had scaled past the 10,900. So that's a significant drop down from yesterday. Now, if you look at some of the areas that traded on the exchanges, most of them are traded lower except for Vedanta, which closed mildly positive. But big cuts coming in for Tata Motors and ICICI Bank, more than 3 to 4.5% gone from there. Dr. Reddy's and Vedanta also more than 1% cut on that one. So did Wipro see a cut of more than 1%. HDFC Bank 0.5%, as well as Infosys about 0.5%, with the exception of Vedanta that closed marginally positive. Now, if you look at the commodity cues that we are getting, some bit of negative cues coming in as far as oil prices are concerned, currently trading about 0.4 to 0.5% lower after gaining an equivalent amount overnight. Now, the reason for the drop is the surprise inventory data that we got. So the EIA has in fact reported 4.8 million barrels build up of inventory. So that's the negative for oil prices. If you look at the metal space, the big cues came in from the gold prices, which in fact dropped below the 1300 per ounce mark, and this is the first time that it has traded below that key level for the first time since December last year, and in fact trading at the lowest point of the current calendar year as well. As far as base metals are concerned, once again, mixed cues coming in from there as well. We had aluminium and zinc, which closed positive, while we had some of the other base metals like copper and lead, which declined more than 1% each. And similar cues can be seen from the Shanghai Futures Exchange, where most of these base metals are trading with a mixed bias. So zinc has gained a nearly 1%, while copper has lost more than 0.5%. So those are the cues coming in from the metal space. But as far as fund flows are concerned, the trend in fact resumed yesterday. We saw that it was not the case. But today the FIs sold more than 500 crores, while the domestic institutions bought more than 500 crores. For the month itself, FIs have sold about 2,500 odd crores, while the DIs have pumped in more than 6,500 crores for the month itself. As far as key indices are concerned, remember that yesterday we had a big sell-off in the mid-cap and small-cap space, and that's the reason you're seeing a 1% cut for both of them. While the Nifty ended marginally flat, but there was volatility in the market, came off quite significantly from the day's high as well. As far as gainers are concerned, we had the Nifty IT space and the Nifty metal space, which did rather well for themselves. So 0.2 to 0.4% gains for each of those. Big cuts seen in the Nifty PSU banking space, more than 2% lost over there, and the Nifty Realty Index continues to top the losers list for days now. That also ended about 2% lower. The VIX index that had a sharp sell-off ended about 8% lower, and this was the biggest cut that we saw since April 2018. Now we have the contribution. Now it largely closed flat for the Nifty, but HDFC Bank, TCS, Kotak and Tata Steel contributed for the bulls, while the bears looked at Reliance, ITC, Tata Motors and SBI for the contribution. But Agam, what can we expect from the futures and options market?
Well, Jayesh, we'll have to wait and watch on the implications of the elections. But that said, when it comes to the futures, yesterday was a quite critical day when it came to changes in the futures and options space, and we actually really didn't see too much, considering we started off at a high and then eventually ended near day's lows. For the Nifty, we saw more unwinding when it comes to futures. Coming down to the Nifty bank futures, there was a lot of traction. We did see about 2.4% addition in open interest, but still we have some reluctance from traders taking positions and going forward to today's session. That said, moving in, we did see the India volatility index come off to quite an extent. This is largely on account of the event behind the markets. And when it comes to the put call ratio, well, that edges lower to around 1.59. A little bit more unwinding when it comes to some of these lower level puts, as you can see here. As we saw, there was a lot of base formation in the 10,500, 10,600 puts, but that has now changed, and now we are seeing a little more writing around the 10,800 put now. And of course, in terms of calls, very little change. 11,000 remains the one with the maximum open interest. Coming down to stocks, a few stocks which will be in focus. PC Jeweler moves back into the band. And well, we have RB Infra which moves out of the band. Two other stocks I'm keeping an eye on is ACC. We've seen some weakness there, shorts building up there, and the other stock that we are talking about is Allahabad Bank, along with the rest of the public sector banking space. Severe weakness coming in there, down nearly 9%, 11% added in open interest towards fresh shorts. And of course, Bajaj Finance is the other one which saw longs building up. So plenty of stocks to keep an eye on. And of course, the benchmark indices, as per indications, showing a negative opening.
All right, thanks Agam for that. And we're speaking about the election result. It seemed pretty straightforward initially, but then turned into a suspense thriller as the numbers filtered in. The Karnataka verdict has thrown up a hung assembly, with the BJP emerging as the single largest party. But the deficit of seats for the BJP has turned into an opportunity for the JDS and Congress to stake claim to form the next government. The ball is now in the governor's court to decide who forms the next government. Tamanna Namdar has this special report.
The Karnataka verdict has thrown up a hung assembly, and now it comes down to what decision Governor Vajubhai Vala makes next. Vajubhai Vala has been a BJP politician, and now in the constitutional post of governor, his next decision will decide the fate of the Karnataka government. So what are the options before the governor? In scenario 1, he allows the single largest party to form the next government. This would of course be advantage BJP, but they would have to prove their majority on the floor of the House, which would not be an easy task since they are still short of a simple majority. In this case, the Congress is also likely to move courts to counter a decision like this. In scenario 2, the governor could invite the Congress and JDS combined to form the next government. Together, the two parties are well placed with the numbers, but he will also have to consider that this was not a pre-poll alliance. In the third and most unlikely scenario of all, he could call for a re-election if no clear combination emerges. Now, while one cannot predict what the governor will decide, he does have guidelines to work with. The 1998 Sarkaria Commission recommendations have a clear order of preference, in which at number 1 is to call a pre-poll alliance, which doesn't exist in this case. At number 2, a single largest party with support of others could be called, and at number 3 in this order of preference, it would be a post-electoral coalition with full support. It is not just the Sarkaria Commission. There is another commission in 2010 which has similar recommendations, where in the first recommendation or the first order of preference is that the group with the largest pre-poll alliance is invited, and then the single largest party with support of others. If he follows these recommendations, he is likely to go with scenario 1, where the BJP is invited to prove its majority. What would also bolster that argument is the SR Bommai case, where guidelines have been set to invite the leader of the party commanding majority in the House or the single largest party. But, and this is a big but, governors in the recent past, after state elections in Goa and Manipur, have chosen to ignore these guidelines and go with a coalition that presented the numbers. In those two cases, it was advantage BJP. So what will Governor Vala choose to do? Well, that is anybody's guess.
Well, that might just be anybody's guess, but it's very important to how the markets pan out today. In fact, we told you that the stock markets, at least the benchmarks, didn't move too much. They ended flat, but the rupee and bond markets moved significantly. The rupee, in fact, cracked below that 68 against the dollar mark for the first time since January 2017, as uncertainty over government formation in Karnataka hit the forex market sentiment. The rupee plunged 56 paise, the second biggest single-day fall of 2018, to end at a new 16-month low of 68.07. Now, speaking about the performance of the rupee so far this year, let's pull up the WCRS function and pit it against the Asian currencies for the year-to-date period. And if we can pull up that chart, you'll notice that India is, or the Indian currency is, the worst performer in Asia in 2018 now. All right, and speaking about, all right, there you have it on your screen. It's one of the worst performers in the Asian market. Now, Speaking about the bond market now, the 10-year bond yield also increased significantly. It hit a 3-year high and it ended at 7.905%, a last level seen on the 18th of May 2015, and that was up from its previous close of 7.825%. All right, with that, let's pull up the next big story. Punjab National Bank reported the biggest ever quarterly loss in the history of Indian banking. A large chunk of it can be attributed to the Nirav Modi fraud and RBI's new stressed asset norms. Ira Dugal reports on the math behind PNB's record loss.
Those watching the banking sector have become slightly numb to large losses and bad loan ratios. But this one would have shaken you awake. Punjab National Bank reporting the largest ever quarterly loss in Indian banking history, 13,417 crore. Incidentally, Punjab National Bank also held the previous record of the largest quarterly loss, which was at about 5,367 crore. They have, done a one-up on themselves, reporting more than 13,000 crore in losses in the March 2018 quarter. It's important to try and understand what went into that loss, because there were two important factors playing in. One was the Nirav Modi fraud, which had been detected in February, and then there was also the Reserve Bank of India stressed asset circular, which had come in earlier this year. So both of those stories played in to PNB's quarterly loss. Their operating loss was at about 447 crore. It was a loss, but a smallish loss. Provisions were extremely high at 20,353 crore, but they had a tax write back of 7,384 crore. To sort of total it all up, you got a net loss of 13,417 crore. It's not clear on account of what they have done this large tax write back, because it is a large tax write back, failing which the losses would have been in the region of about 20,000 crore. We're not clear about that, but this is what the basic P&L looked like. Now, if you look at what has happened on bad loans, their gross NPAs jumped by 86,000 crore. You've seen fresh additions of about 44,274 crore in the quarter. Some part of this is just organic addition to bad loans, because remember, that story has been playing out. On account of the fraud, there are about 7,579 crore that has been added to the gross NPA pile. Some of this would also be direct credit exposure, which may have existed to Nirav Modi, his companies, Mehul Choksi, his companies, so that would be part of this as well. On account of the RBI circular, they have seen 10,237 crore added to gross NPAs, and that is on account of the fact that the RBI had said that those accounts which were being resolved under stressed asset schemes but not concluded would have to be pegged down as NPAs. So that seems to be what has happened there. Now, if you move on and talk a little bit about what has happened as a consequence of that large loss and those large provisions to their capital position, their capital adequacy ratio is at 9.20%. That is well below the Basel III requirement. On the CET1, which is core equity tier 1, they are still marginally above the Basel requirements at 596, but by no means is their capital position comfortable. Will the government chip in? We don't know. Last, the government said that we will not chip in. It will be tough for the bank itself to generate capital to go back to 11% plus capital adequacy ratio. So that is a core concern at this point in time with the bank. There are other aspects to focus on, and we are trying to give you a sense of what they have done with the fraud amount. So the total fraud amount is now at about 14,347 crore, the bank disclosed. They have provisioned for about 50% of it, which is 7,178 crore. So there is still 50% which requires to be provisioned for, which will happen over the next 3 quarters. The RBI had given them that dispensation. Also, incidentally, they have spread out the provision on mark-to-market losses on their treasury portfolio. So they have taken some of that relief that the regulator had provided them. In terms of the fraud amount, what they owe to other banks, 6,586 has already been paid out, and the rest will be paid out in subsequent months once the credit against those LOUs comes due. But they have created liabilities for the remaining amount, which is 6,960 crore. So those are the numbers, just explaining the details behind this large loss. Lots of questions for the management to answer as to what happens from here on. These are just the numbers. How does the bank proceed? But that depends on the management being willing to give that clarity.
All right, clearly a stock that's going to be in focus today. Let's turn to the earnings that you have to watch out for today, and starting with Tata Steel. It's expected to be back in the black in the fourth quarter of FY18. Higher steel prices are expected to boost the numbers. Nikki Mirchandani is here to tell you all about that. Nikki, over to you. Morning.
Hi Alex, we're expecting a muted sort of quarter coming in for Tata Steel, at least on year basis. Sequentially, the numbers might just look a little better. Revenue is seen flat for this company on year basis to a number of around 32,787 crore. EBITDA is seen declining by as much as 16.5% for this counter. Sequentially, though, we might just see some uptick coming in on 3.15% on account of higher spreads. Net profit is seen at a 2,271 crore against the loss that we've seen in the corresponding quarter. Now, volume growth, importantly, on consolidated basis is expected to be down by as much as 5.4%, and EBITDA per ton is also on consolidated basis expected to slide by 12%. So what goes behind the making of the numbers? Yes, we are seeing higher steel prices play into effect on year basis, but then also do bear in mind the fact that the coking coal prices also have risen significantly, which in turn may eat into the realization gains of the company and may weigh on the operating performance of the company. Besides that, Kalinganagar unit shutdown may also have some kind of volume impact for the company sequentially. Standalone basis, again, we're going to be keeping an eye out on the numbers on standalone basis. Three important parameters will be EBITDA, which is expected to see an uptick of nearly 6% on account of cost saving measures along with the higher steel prices. Volume is, however, seen down again for standalone basis also, but then EBITDA per ton, an important metric on standalone basis, is expected to inch higher 14% year-on-year basis to a number of around 15,403.
All right, that's about Tata Steel. Thanks for that, Nikki. Do stay with us. We'll come back to you for another company. ITC, though, is expected to post a stable fourth quarter. Foods business is expected to drive growth even as cigarette volumes remain subdued. Agam Vakil is here to tell you all about that. Agam, over to you.
Well, we're expecting another steady quarter for cigarettes, especially ITC. When it comes to revenues overall, we're expecting an uptick of around 7.3%. EBITDA margins expected to come in at around 35.5% versus 34.9%. Net profit could see just about a 1.6% growth, but that is due to exceptional items. Now, behind the expectations is the cigarette volumes that are likely to remain subdued. Expectations of a negative 4% to a positive 1% when it comes to volumes growth. And the positive, of course, is that there hasn't been any GST change when it comes to cigarettes in this particular quarter, and that's the reason why we're expecting some stability in volumes, on the back of stability in prices. FMCG business, of course, is expected to grow by a robust 15%. That will be the big positive should we see that number come through. And of course, we're also keeping an eye on consistency in profitability in this particular segment. That said, hotels is likely to show strength too at around 10%. Agri and paper business is still likely to, well, perhaps struggle and see subdued growth. But on the whole, we're expecting a steady quarter for ITC.
Thanks for that, Agam. Let's go back to Nikki now, and she's going to have her hands full. Nikki, Hindalco as well reporting numbers today. I think one of the key parameters to watch out for will be volume growth of aluminium and copper.
Yeah, that being one, also we have EBITDA per ton, which is an important metric when you look at the metal companies. But then I'm going to start off with the basic numbers. You know, Alex, also we're expecting a muted quarter again for Hindalco on a year-on-year basis. Sequentially, however, we're expecting a better performance on account of higher spreads. Basic number on standalone basis year-on-year revenue, we are looking at an uptick or moderate growth of around 3% EBITDA is, however, seen lower by as much as 5.3%. Margins are seen contracting by to 11% as compared to 12.5%, and net profit is also seen declining by as much as 8% for this counter. On standalone basis, well, we are looking at an uptick in revenue by 2.94% sequentially, while EBITDA is expected to remain muted. Volume, as you just mentioned, the delivery both for copper as well as aluminium, we are expecting an uptick of 1.5% in aluminium and around 16% in copper division. What goes behind behind the making of these numbers? Well, the lower copper transfer as well as refining charges, along with your higher cost of production and the LME hedges which have been created for aluminium segment is expected to weigh on the operational performance of the company, because of which we're expecting some decline coming in. Also, the issues that we like to keep an eye out will be the volume growth. Along with that, we'll be looking at the LME hedges guidance that the company could provide and the commodity outlook, given the sharp uptick that we've seen in commodity prices in light of the global shortage. Back to you.
All right, just stay with us, Nikki. And Nikki, can you stay with us?
Yeah.
Just wanted an update also. There'll be some conversations with regard to Tata Steel's bid in the insolvency space as well, right? We're waiting for some updates there.
Yeah, so we are looking at, yesterday we did see some procedure coming in on NCLT with regards to the Bhushan Steel, but then yes, we are supposed to read into that. For now, it seems that the ambiguity between the takeover for Liberty House is ruled out. So now just that we have is NCLT approving the kind of approval that we've seen for Tata Steel with regards to Bhushan Steel, for that matter.
All right, thanks so much for that, Nikki. We'll have to stay on that. Earnings, of course, and also commentary on the takeover bids. But let's move on now and talk about the stocks in news. Shraddha Babla is here to tell you all about the stocks that you have to watch out for on account of them being in the news. Shraddha, morning.
Good morning, Alex. I'm going to start off with some of the earnings that came after market hours. Strong numbers from Endurance Technologies, where revenues grew by 29%, net profit by 39%, and EBITDA margins also expanded from 13.8% to 14.5%. On the other hand, we had a weak set of numbers coming in from PI Industries that has been, disappointing for the last few quarters now. While revenue growth came in at just a single-digit number of 3%, the net profit fell by 22% because operationally, the EBITDA fell by about 12% or so. So negative reaction likely there. Also disappointing set of numbers coming in from Shakti Pumps. Revenues fell by 22% and net profit fell by 20%. EBITDA was unchanged. JHS Schwengard Laboratories revenues grew by 38%, but the net profit took a sharp dip down about 84%. A lot of it has to do with the tax credit in the year-on-year base quarter. But overall, EBITDA growth of 14% also lagged revenue growth, and hence we did see margins also contracting. So again, we could classify that as weak set of numbers. You also have an ET report which says that the coffee board has lowered the coffee crop estimate for 2017-18 by about 10%. So you could see some impact on Tata Coffee, CCL products. So watch out for all these coffee names. ArcelorMittal has transferred 7,000 crores to SBI account to become eligible for making a bid for SR Steel. So watch out for Uttam Galva. Reliance Communications has been admitted into insolvency by the NCLT bench, so watch out for that name. In addition, we also saw a bulk deal in the same counter. Systema Sham Teleservices has sold 0.6% in RCOM. So again, that will be one of the names to watch out for, Alex.
All right, those are the stocks that you have to watch out for, but front and center are going to be the updates from Karnataka with regard to who forms the government there, and you'll find all the updates right here on Bloomberg Quint Live. You'll also find several stories that are already on the website. Here are just a couple of them. First up, North Korea has said that it is suspending high-level talks with South Korea that were scheduled for today over military drills that Seoul has scheduled with the US, while cautioning Washington to consider the fate of the next month's summit between Kim Jong-un and Donald Trump carefully. Now, India's trade deficit widened the most in 3 months in April as rising crude prices weighed on the world's third biggest oil consumer. That's all we have for you on this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.